Good morning. This week, we're setting aside the usual look at the last few days for something bigger, our quarterly market review, where the markets landed after the second quarter and the first half of the year, and the specific changes we're making across our portfolios now that we've finished reviewing the managers and strategies we entrust your money to. I'm Jose Martin with LifeCraft Wealth Management. Let's get into it. The year didn't start smoothly. In the first quarter, the S&P 500 fell about 4% as conflict in the Middle East closed the Strait of Hormuz and sent oil prices spiking. If you only looked at March, you'd have been very worried. Then, the second quarter turned the story completely around. A mid-June agreement reopened the strait, oil fell more than 20% off its highs, corporate earnings came in strong, and the market staged one of its best quarters in years. The S&P 500 up roughly 15%, its best quarter since 2020. The Nasdaq climbed more than 20%, and small company stocks had their best first half since 1991. Put the two quarters together, and the S&P 500 entered the second half up about 10% on the year. The takeaway isn't the number, it's the shape of it. A rough quarter gave way to a strong one, and the investors who didn't overreact in March were still standing in June. That's exactly the behavior our process is built to encourage. Every quarter, we review each manager and strategy across our three portfolio sleeves: growth, low volatility, and flexible, and grade them on the evidence, not the headlines. And here's what that review produced this time. A quick note before I do. What follows is a look at our representative model positioning for information only. It isn't a recommendation, and individual accounts will vary. Start with growth. This past quarter, it lagged the broad U.S. equity market slightly, but zoom out and it has continued to outperform over longer stretches, and done so with less volatility. So we're retaining every manager here with two targeted additions. Alpha V focused growth stays at 25%. It's been a slight underperformer year to date, but that's no surprise for a highly concentrated strategy, and we're holding it on the strength of a track record that runs more than 20 years. AQR Trend Total Return also stays at 25%, a strong contributor that's delivered with low volatility relative to the equity markets. It's a candidate for a larger role in future quarters. Scarecrow Trading's High 5 stays at 15%, a highly volatile, heavily leveraged strategy. We're consolidating it, pulling it out of the flexible sleeve entirely so its exposure lives in just one place. AQR Long Short Equity comes down from 35% to 25%. Still a strong performer, but we're making room for two new focused positions. We're adding two pacer strategies at 5% each. They're NASDAQ International Patent Leaders and their Data and Digital Revolution strategies. Together, they represent our best thinking on the continued advance of technology, intellectual property, and artificial intelligence. Next, low volatility. Measured against its traditional benchmark, the aggregate bond market, this sleeve continued to outperform. We're keeping every manager with some modest changes to weightings. Reagan Total Return moves from 20% to 15%. Spectrum Low Volatility holds at 15%. AQR Diversifying Strategies eases from 50% to 40%. And Eaton Vance Global Macro Opportunities moves up from 15 to 30%. That last increase is a deliberate vote of confidence. The strategy has continued to pair solid returns with low volatility and limited correlation to the stock market, which is exactly what this sleeve is for. Finally, the flexible sleeve. With Scarecrow moving over entirely to growth, this sleeve is now held entirely by Potomac's bull-bear strategy. Potomac remains our standard for tactical allocation, a growth profile that has tracked close to the equity markets with a volatility profile that's been roughly half. Well, that's the review. These aren't reactions to a single quarter. They're the results of a deliberate process we run all year long. And one more thing. We've been developing some genuinely exciting new capabilities behind the scenes, and we can't wait to share them with you in the coming weeks. And above all, thank you. Thank you for your continued trust and support. It's the reason we do this work the way we do. I'm Jose Martin, and I'll see you soon.